Assalamu alaikum and good morning, everybody from Dhaka. My name is Michael Foley. I'm the CEO of Grameenphone, and along with my colleague Carla Broughton, the CFO, we will present today the Q4 2018 results. If you have any questions, I just want to remind you, feel free to write them into the website as indicated as soon as possible. Grameenphone delivered a strong financial performance in the fourth quarter in terms of growth, efficiency, and profitability. Competitive activity this quarter was somewhat more muted due to the impending elections and the seasonality effect. This year, the industry acquired 11.8 million new subscribers, growing at 8.2% from last year. Real SIM penetration in the country now stands at 57% as of the end of 2018. In the fourth quarter, GP generated 34.7 billion taka in revenue, which is a growth of 7.7% over the same quarter last year. Our EBITDA margin stood at a healthy 62.3%. We produced 11.5 billion taka in profit after taxes. We drove 4G SIM replacement in this quarter, resulting in 6.3 million 4G SIM replacements. For the full year of 2018, our revenue stood at 132.8 billion taka, a growth of 3.4% from 2017. EBITDA grew 5.8% from last year for a total of 80.7 billion taka at year end. As per the BTRC published data, we ended the year at 72.7 million customers, or 46.3% SIM market share. We experienced 6.6% growth in voice revenue this year, mainly driven by the unification on-net, off-net traffic rates, and that was made effective by the regulator in Q3, and the growth in the subscriber base as well, and that was offset by a decrease in the average number of minutes used by customers. This year, Grameenphone has contributed 84.2 billion taka to the national exchequer of Bangladesh in the form of taxes, VAT, duties, 4G licenses, tech neutrality, and other fees and levies. That's $1 billion. We have focused strongly on high-quality subscriber acquisition, and this has been done through a very strong network expansion drive. Throughout the year, we have not only launched 4G by putting new antennas on our towers, but we have modernized the network in order to prepare it for 4G, 5G, narrowband IoT, and other technologies. In Q4, we continued our rollout, adding to 2G, 3G, and LTE sites. 4G coverage now has reached 350 or more upazilas. Around 1,500 new 2G sites, in-building solutions, microsites were delivered as well. Now more than 99% of the population of Bangladesh is under Grameenphone coverage. More than 2,000 new 3G sites have been rolled out in the year. Now more than 95% of the population can enjoy Grameenphone's 3G network. With 14,687 sites, Grameenphone has the most number of high-speed enabled internet sites, high-speed enabled sites in Bangladesh. That means 3G and or 4G on 14,687 sites. There have been challenges. There is significant infrastructure development in the country now, especially on highways and railways. This has caused for us over 1,000 fiber optic cable cuts during the year. This is not just a problem for Grameenphone, but for the entire industry as well. However, working with our partners and our teams, we have been able to overcome this challenge with prompt recovery in almost every case. But this is something troubling that we will need to see addressed in the future. We have continued to strengthen our distribution, and we did experience an early onset to winter this year in late November with a lot of rainfall. But we continue to focus on the basics. We measure how long a customer stays with us after joining. We have a measurement called M3, which is what percentage of customers are with us 90 days after they've joined our network. And we move that very aggressively across all our regions. And we have now got that to 83% or more across the country. And that is not only a leading indicator in the country, but for the industry as a whole. We launched very lucrative campaigns for our retailers, which led to a renewal of our drive on 4G. And with 6.3 million SIM replacements, we are now seeing real effects of offloading customers from the 3G network to the 4G network to the benefits of all the customers in the country. In the fourth quarter as well, we launched a new number series, 013. We had essentially run out of 017 numbers, the numbers that we've had for the last over 20 years. We focused on that significantly during the fourth quarter, and 92% of our gross adds in the fourth quarter came from 013. That's 2.9 million new customers on the 013 number range. Another thing that's pretty interesting and important for us is MyGP. This is the app that we use, or that people use in the country, to be able to manage their accounts, pay for their bills, recharge, and access a number of different services. This is a very important initiative for us. These digital channels of distribution are critically important for the future of the company. And now we've reached 4.5 million active users on MyGP, and we have now created a lot of momentum behind the digitization of the relationship we have with our customers. We've seen, in fact, stable voice and data prices over the quarter. There's been some revision to pricing. A VAT correction was implemented on data pack purchases, and from FlexiPlan we did that. That has contributed to us to a 7% month-over-month growth in FlexiPlan revenue. There have been no major discount or campaigns in the fourth quarter, no bonus campaigns, but the promotion of monthly packs, 199 taka, for example, has generated 100,000 hits per day for us, and a 38 taka data pack is generating for us 550,000 hits per day. I'll talk about this a little bit more. Monthly packs continue now to be more important for us as well. The revision of monthly packs for data to upgrade customers from daily and weekly packs to monthly packs has really been important for us. And it has been successful with positive reaction in the market. So a 350-minute, 199 taka voice pack is the hero product of the year for us, leading for up to 100,000 plus daily hits. And this has been a positive contribution for us on revenue of 16 million taka per day. A 2 gigabyte, 38 taka data pack as well has also been a hero product for this year, with 550,000 hits per day and a positive contribution to our revenue of 19 million taka per day. 4G is one of the big stories for the year. We reached over 5,000 sites, actually 5,009 sites by the end of the year 2018. And this is not just, as I said, putting up radios on existing towers, but it's also modernizing our sites to single RAN architectures so that we can support 4G, network slicing, 5G, IoT, and so on. And this includes modernization of our radio backhaul and other backhaul infrastructures. excuse me, 54.6% of the sub-base that's under our current coverage have 4G SIMs in their 4G devices. Now, there are about 10.7 million 4G devices in the Grameenphone network. This is encouraging. It says that as we continue to grow our 4G network, we will find more and more people coming onto the 4G network. And as we convert more people from ordinary SIMs to 4G SIMs in their 4G handsets, we're going to continue to offload customers from the 3G network, helping the experience for both kinds of clients. We ended the year with 37.1 million data subscribers, which is 51% of our total sub-base and an 18.9% growth from the same quarter last year. We met our objectives on the 4G network, which is now carrying already, after essentially 7 or 8 months of operation and only partially deployed, 20% of our total data traffic is being covered and carried over the 4G network. We did reach 7 million unique 4G users in the quarter, which means 7 million users have latched on to Grameenphone for their data network on 4G at least once. Now, we will continue to focus like a laser beam on the best network experience for our customers as we continue with the 4G rollout. Regulatory, for those of you who have been listening on a regular basis, is a rich area for discussion. SMP regulations were brought forth on the 14th of November and by the BTRC, and the SMP regulates telecommunications sector, includes MNOs, ISPs, NTTNs, TowerCos, IXCs, IGWs, and so on. Mobile service providers holding at least 40% of the subscriber market share or revenue market share or spectrum market share of over 40%, in fact, can be or will be defined as SMP. On the 4th of December, we sent a letter to the BTRC requesting industry consultation, and the BTRC continues to work on the formulation of rules for SMP. And in this area, we are very clear. We demand and require the best possible international practices in this area. The BTRC audit continues to be an issue of interest. On the 17th of December, BTRC invited GP and the auditor in a three-party meeting, I should say, to discuss selected areas of findings. The next course of action will be determined in the upcoming commissioner meetings. We're expecting a few more discussions leading to the closure of this item. On tower sharing, the BTRC has handed over the licenses to the selected firms on the 1st of November. The industry is in dialogue with the BTRC for a smooth transition, and GP is running commercial negotiations with the licensees. On quality of service, on November 11th, the BTRC has made the quality of service guidelines public on their website. The QoS parameters have been set only for MNOs, the public switch telephone network, and broadband service providers. However, no parameters have been set for the NTTNs yet, who are in fact self-styled carriers of carriers, and it is critically important that this part of the value chain be managed in a way to provide service quality across all the client base of the country. A letter with our concerns has been sent to the BTRC on the 10th of December, and we continue to have discussions on this issue with them. So what are our priorities going forward? First, on growth and renewal, we will continue to win in voice. There is a significant number of people in this country that still don't have access to basic phone services, and we will continue to work in this area with coverage leadership, distribution leadership, and challenging in red markets. We will enable personalization, critically important. Tools like MyGP, which I showed you earlier, are extremely important for distribution, and they enable the personalization of offers to customers to get what they need when they need it. The second one is simplification and efficiency. We will continue our business simplification program, boosting collaboration and efficiency. it is critically important that we understand that our businesses have to digitize and have to be more efficient. On winning team, we will continue to sharpen our focus, enabling capabilities in our core business and looking for opportunities in the adjacent businesses to the company. We will implement new ways of work to ensure agility and ways of increasing our efficiency and our effectiveness. And let me spend a little bit of time on responsible business. License regime reform is critically important, and we intend to launch advocacy and platform building exercises in this area to ensure that the platforms are ready, the license regimes are ready to enable really the digital Bangladesh dream that we all share. Spectrum pricing advocacy is also critically important, and we are actually going to work very clearly on this to work on the availability of spectrum at reasonable prices for operators to be able, again, to deliver the best services in the world and to deliver on digital Bangladesh. On the resolution of financial issues, we've started to use the alternative dispute resolution mechanism at the NBR, and we are looking forward to the results of that. We will continue to do reputation building. We focus on Sustainable Development Goal number 10, which is about reducing inequalities through the use of telecommunication services, and we're going to continue to increase our emphasis on reputation building. Flexibility in organizational development is also critically important, and we'll be working on that as part of our responsible business. With this, I would like to invite Karl-Erik Braathen, our CFO, to talk a little bit about the results in detail. Carl.
Thank you, Michael. So it is with great pleasure that I present the fourth quarter, and as highlighted by Michael, we have had a very strong financial performance with both top-line growth, efficiency improvements, and margin improvements. Double-digit growth in subs and traffic revenues, 11.3% year-over-year in the fourth quarter. We are reporting a 62.3% EBITDA margin. For the last 4 quarters, which basically means 2018, the full year, we have a CapEx to sales healthy level of 12.7%, and maintaining, of course, our network superiority on all technologies. And we have also a record high earnings per share in the fourth quarter of 6.72. This is a growth year-over-year of 51.8%. If we normalize for one-off impacts from both quarter 4 2018 and the same quarter in 2017, the earnings per share increase is 22.6, so still strong on a normalized basis. When we normalize subscription and traffic revenues, we have in the fourth quarter 12.2% growth year-over-year, and for the full year 2018, 8 points. We had a power failure here, so I will continue with the revenue. As mentioned, when we normalize, we have 12.2% growth year-over-year in Q4 and 8.3% for the full year. In nominal terms, this means that we have grown revenues in Q4, subs and traffic revenues in Q4 with 3.5 billion year-over-year. On a reported basis, as you see, we will report 11.3% growth in subs and traffic revenues, and for the full year, 7%. And as we have emphasized in every quarter this year, we have made some accounting changes in how we book revenues related to third-party content and devices. On total revenues, we are reporting 7.7% growth in total revenues, and for the full year, 3.4%. And again, if we normalize for the contract change impact, we have a 9.9% growth in Q4, and a 6.3% for the full year. This is of course driven by the growth in subs and traffic revenue, 3.5 billion, but partly offset by somewhat lower interconnect revenues. Moving on to data. We have a 25.1% growth in data revenues, and this is of course driven by more subscribers, 18.9% growth in our subscriber base. We also see that we have added 5.9 million new internet subscribers. And we also see that we have a 5.2% growth in the data ARPU. As you see also here, now data revenues represents 19.5% of the total service revenues. And also on the active data users, we have now 37.1 million active data users, which is now 51% of the total base. And it keeps growing as we are growing the number of 4G base stations, and we also see that the smartphone penetration is increasing. And as Michael mentioned in the beginning, we have 5.5 million active 4G users in our base. Moving on to ARPU. Year-over-year, we have a 2% service ARPU drop. But as mentioned, we have a 3.6% data ARPU growth if we compare to Q4. There is a quarter-over-quarter drop in the service ARPU, mainly due to seasonality impact and the early onset of winter. And if we see the 2% service ARPU drop year-over-year, if you could say it's driven by lower interconnect revenues, especially after the unified floor price and harmonization of on-net and off-net. If we correct for that, we have a quite flat service ARPU year-over-year. And on data, we have the data ARPU growth year-over-year, 5.2%. We have an average price per megabyte decline by 30.6%, mainly due to competitive offers. But still, we believe that we are able to monetize data, and as you see also that the it's rather stable average price per megabyte if you compare Q3 with Q4. And also, you could say the data, that's where we see the most aggressive offers from our competitors. Moving back to the financials, we have, as you could say, the headline is saying, we have a normalized EBITDA uplift of 2.3 billion year-over-year. But focusing on OpEx first. OpEx remains stable on a reported basis for the quarter. And 6.5% for the full year. And this despite network expansion and 4G driven market expenses. But we have a normalized OpEx increase of 3% in Q4. And as you see from the green line, we have an improvement in OpEx to sales of 1.5 percentage point. And the normalized EBITDA growth was 12.3%, with 2.6 percentage point improvement in EBITDA margin, 61.3% last year, this year versus 58.7% this year. But on a reported basis, we have 62.3. Moving on to investments, and as Michael mentioned, of course, we have focused a lot on rolling out 4G. And as of, you could say, 31st of December, we have 5,009 4G sites, but we have also expanded our footprint on 2G and 3G. And we have a population coverage for 2G and 3G now at 99.54 and 94.23 respectively. We are doing capacity enhancements and of course network and IT modernization for future business. You see no, sorry. Yeah, we will get back to the capex number as such, but we had total capex for the year 16.9 billion, but this is without, of course, the investments we did in spectrum and licenses. And we have been, you could say, hovering around 4 to 4.5 billion per quarter. And we do all the international procurement through the Telenor Procurement Company based in Singapore. And we strongly believe that we have the best prices possible in the market. And that that is a big part of our competitive advantage also in Bangladesh. Moving to the earnings, as mentioned, normalized earnings growth of 22.6%. On a reported basis, we have 51.8% growth in the reported earnings per share. Mainly driven, of course, by the higher, the 13.9% growth in EBITDA. We have lower FX losses, but as you might remember, we had a negative impact in the same quarter last year of 2 billion. And that's the big difference between, you could say, the reported earnings per share and net profit after tax growth of 51.8% compared to the normalized 22.6%. Operational cash flow 3.5, or for the quarter 17.7 billion operational cash flow. And as the heading is saying, we have hardly any debt. We have net debt to EBITDA of 0.03. Of course, you see the fluctuation in the net debt to EBITDA more than you do on the operational cash flow. But that's, you could say, in Q3 we had the interim dividend payment for 2018. But basically we have very, very low debt and very, very high financial flexibility going forward. For the year, we have an operational cash flow to sales margin of 47.8%. Dividends, the recommendation from the board that will be presented in the AGM, 155% of paid up capital cash as final dividend for 2018. That means that the total, you could say, earnings per share for the year will be 26.04, and the full, you could say, dividend for 2018 recommended is 28. We paid out 12.5 BDT as interim dividend, and we are suggesting 15.5 BDT per share as the final dividend for 2018, subject to approval on the 22nd AGM, scheduled for 23rd of April. This gives a payout ratio versus the profit after tax of 108%, the highest since 2014. Then you could say just the investment, and then looking back over the years, of course this year very high because we bought the 1800 megahertz. We converted the existing spectrum portfolio to technology neutrality, and we also bought the 4G license. So altogether, capex in 2018, slide with the heading investment and contribution to the Bangladeshi economy. And on the right side, we are very proud of what Michael also mentioned in the introduction. We have contributed with 84.2 billion taka to the national exchequer in the form of taxes, VAT, duties, 4G license, spectrum and tech neutrality. And if you look back over the last 5 years, you see the impact that Grameenphone have had financially on the economy of the country, and we will do so also going forward. Then just a few words on, you could say, accounting standards under IFRS, because there will be some small differences in our statutory financials and what we have presented here today and through the year, because we have used IAS 18 and then produced 2 sets of numbers, one also under IFRS 15, in order for all of you to be able to compare with the same period last year. IFRS 15 haven't had a big impact on us. I think the biggest impact have been more the opening balance adjustment of retained earnings of BDT 2.6 billion, based on the fact that we have our prepaid customers' average lifetime is more than 4 years, and then we have to amortize the acquisition cost over that period. From 1st of January this year, IFRS 16 is introduced. Will have, of course, much more impact because this is regarding all the leases, and the leases has to be reflected in our balance sheet, and they have to be amortized over the contract period, which also means that they will not be booked as cost of goods sold or OpEx, but they will be reported as amortization. Then, before Michael takes the summary, I will just inform that all the financial material will be uploaded to our investor relation website later today. So you will have access to everything. And of course, we will interact with many of you in the days and weeks to come. Thank you.
Thank you. So let me just speak in summary for a moment on the presentation we gave you here today, then I'll go to the Q&A. So in the fourth quarter, healthy growth despite some external challenges and seasonality. We've seen growth in revenue with stability in voice and data pricing. We're working very hard on quality of acquisition, so we're not wasting subscriber acquisition costs, and our new number, Series 013, has been very helpful to us in doing that. And we have some earning impacts from one-off items. For the full year, it's a strong business performance with healthy returns despite a lot of challenges, especially beginning of the year with weather. The growth in voice and data revenue was driven by consistent investment in 2G, 3G, and 4G as well. Our earnings growth is strong with a high dividend payout, and our focus always remains on providing a superior network experience for our customers. With this in mind, I just brought the laptop over because there's quite a few questions, and I'm going to try to answer as many as time permits us, and somebody please wave at me if we're going over time. Let me see. Kyril from City Brokerage. Is spectrum neutrality completely in effect? Are you generating benefits out of it? The answer is yes. It came into effect when we got the license, and we use it now to dynamically allocate certain elements of our spectrum in different ways in different parts of the country. Smartphone sales have slowed down globally. Now, although there are kind of initiatives to bring smartphone assembly facilities into the country, do you worry about that? Well, I think there's got to be a balance now between imports and local manufacturing. I think the government is clearly aware of that. We still have headroom of a number of our customers that have 4G handsets that haven't come to the network. I think that will be addressed in time. Everybody is aiming in the same direction, government, industry, and regulator. How does your data usage look in comparison to your peers? I'll tell you when they publish, but we don't have that information right now. There was a slight degrowth on the mobile internet sub-base as per BTRC data from November to December, month over month. That's seasonality only. We don't ascribe a lot of importance to that. From EBLSL, how is GP settling the tower issue? Is there any divestment plan for existing tower infrastructure? So on those issues, this tower issue is still open. There's no obligation for any of the operators to divest of their towers, so that remains as it was before. And I think on the other questions, I'll leave it because they're HR issues, among other things. Is there any potential For further reduction in OpEx, the answer is yes. There is potential for further reduction in OpEx, and we will continue to work on that. Let me see, Consim LLC, there is price elasticity on data. You've seen that. There is a complex question about how the data patterns have changed. We'll answer that one separately to you online. On the Digital Bangladesh initiative, can you provide us some light on the areas where we can contribute today and where we need some regulatory approval? I think the opportunity for Digital Bangladesh is at its very early stages, and the regulator will have now to understand and help us as an industry have the conditions in which we can invest more, bring more bandwidth in, bring more spectrum in, and I think that will be one of the key issues. But right now, I think the discourse between us and the regulator is highly positive, and we find this to be something that we're aligned on. Again, from the same one, minutes of usage are witnessing sharp decline with increase in revenue per minute. Can you share your thoughts on the same? Where can we expect MOUs to stabilize at the current tariff? What I will say on this is historical, not going forward. When the pricing regime changed and we became same on-net, off-net, the number of minutes decreased, but now we're seeing those numbers now creep back to pre-change numbers. So I think right now we're seeing good elasticity in this area, and I think we're going to be in good shape. Two questions from Osman from United Securities. The regulator recently moved to limit the number of offers, both on-net, off-net. Do you see any challenges? The answer to that is it's something that's under discussion and in implementation now, and I think we will be able to manage that quite effectively. Are you happy with current 4G penetration? And what do you see the 4G penetration in the future? The current 4G penetration has met our expectations so far this year, given the amount of sites that we've put up. And in some of our markets like Norway, 100% of the clients are on 4G. That is the target technology over time. It'll take some years for this to happen, but already in other markets around the world, 2G and 3G are being decommissioned. We spoke a lot about SMP already, simply saying we absolutely require that the best practices globally be applied for SMP. We have experience with this in other markets, and if the best practices are applied, the whole industry will grow. And that's more than an expectation. That is something that is absolutely necessary if we want to deliver on the promise of Digital Bangladesh. There's a question about how long we expect double-digit growth of subscribers to go. That's a forward-looking statement under the Security and Exchange Commission's rules, so we won't answer to that. But there is still significant growth available in this market, as the numbers have already indicated. Can you quantify the impact of capitalizations of lease under IFRS 16? That's for you.
We will get back to that, of course, when we report the first quarter, but it's quite evident that it will have a big impact on the telco industry. We have 15,000 sites, and it's a big part of our OpEx base. We have lease lines, yes, it will have an impact on us, our industry, and let's see how we are going to report this, because you could say that when you move a big part of your cost of goods sold and your OpEx below the EBITDA line, the EBITDA doesn't become anymore a good KPI to express your operational performance.
Exotics has a question as well in the same area. I wonder if you could, what will be the contract period for IFRS 16 leases? What will be the appropriate discount rate? Please give an update on the, talk about that separately. Okay, yeah.
I don't think I can add anything on the IFRS 16.
Okay, very good. A few more questions, more on the commercial or business side. let me see. During Q4, the election took place. What was the impact on data and voice in the event? Overall, in December, traffic was down. And of course, we had a number of days where the data network was off. That had the commensurate effect at that point. No more on that one. Another question on what will happen to the existing towers of GP after the tower sharing agreement is finalized. There is no obligation for us to sell. We'll continue to operate and maintain our existing towers for now. And that's the way it operates. And we will look for tower company partners to help us share these towers or to build new towers for us. The growth of calls on OTT is experiencing growth while voice growth is slowing down. We'll actually have growth in voice still in this market. OTT will also be in effect here, but this has happened all over the world and every market that we operate in. It's just the fact of more data is going to be sold and less voice will be sold over time, and it's something that we understand fairly well. We've answered that question before. So I think that covers, thank you everybody. There was a rich palette of questions this time. We've answered all the questions that have been put on the board, or almost all of them. And I want to thank you all for your participation here today. Thank you, Carl, for your presentation as well. And if there's anything else, please get to our investor relations team, and we'll be happy to spend time with you on the phone, in conferences, or face-to-face if you're in Dhaka. Thank you very much, and that's it for today.
Thank you.